again. So is Andre Cronje returning to crypto and Fantom? We have not heard from him since June, but we've just seen a Medium post come out sharing a bunch of important details around his thoughts on Luna, on Celsius, on Voyager, 3 Arrows Capital, and regulation. We're going to break the highlights down because this is a very long article. We're also going to jump into the charts because it's a crazy day in crypto today. Bitcoin up 3.5%. We've got Fantom moving over 4% today. What is going on? Is this the start of the relief rally? We're seeing exactly what we expected, guys. So we're going to break that down. So special likes. Don't forget to subscribe. As always, check out the links in the description to BYBIT and BitGet. But also, don't forget to check out the free link to my course, guys. I've put it for free. It's going to cost thousands of dollars. 10 years of TradFi experience, plotting charts, EMA ribbons, all that good stuff. It's for free. Go use it before I stop making it free. Go use it now. Right, but also, you can see I'm traveling, guys, sat in a dingy hotel, but I've got to give you guys the update, so sorry for the format, but it's just the content that matters, so let's get straight into it. We're going to start off with the charts, and then I'm going to get into Andre Cronje, because what you can see here is Bitcoin is breaking above its daily EMA ribbon. This is huge. This is something we've been waiting for, and we've not broken above it significantly for a while, but I want you guys to hold your horses. Let's hold our horses, but also let's understand what is causing this, because if we can understand what is causing this, we can see if it's sustainable or if it's just an impulse move. Now, I want you guys to look to the previous time we broke above, okay? So this time here, you can see we wicked above and then we got closed back down. If you go back to this situation here, which dates back to September, in the mid of September, we did break above our EMA ribbon and we quickly got thrown down the next day when the CPI reading came out. So we need to watch out what happens here. But let's first understand what exactly is going on, because right now you can see all coins are moving, right? If you look here, Ethereum up 9% today, insane move on Ethereum. And you can see just how quickly, when the market gets hyped and excited, how quickly it's starts to move. There's a lot of pent-up demand waiting there. People with cash on the sidelines waiting to get back into the market because they've got FOMO. They want to get in the market. And that's why it's so important. When we see those painful red days, when it was boring, when nobody cared about crypto, we had to do our buying. Now, what I want to show you is two important catalysts. And I know it sounds boring sometimes, but there's a reason I explain this to you guys every single time. And that's the dollar index. I want to kick off with the dollar index, because what did the dollar index just do? You can see the line drawn there. You can see perfectly how we've been watching this over the last few weeks. And you saw that we created the double top pattern. We saw a lower top here versus this. You can call it an inverse Adam and Eve pattern if you want. Either way, we came down to test a trend line and we broke it. But remember when I said don't get excited? Why do I not want to get excited just yet? Have we broken the trend there on the EMA ribbon? No, we haven't. We have not closed below our daily EMA ribbon just yet on the dollar index. Yes, we've dumped significantly, and that is why Bitcoin is moving. But every other time until this point, what has happened? The dollar index has showed strength. So who do we need to give the benefit of the doubt to? The dollar index. Even when it's used all of its EMA ribbon. Look at this example here. It closed below it and then quickly, powerfully broke. So you've got to give it the benefit of the doubt. Now, in order to understand that, whilst we have a connection error here, we need to understand what is causing, therefore, the dollar index to fall. Well, I've got the explanation for that as well. And what the reason for that is twofold. One, you're seeing this, which is the GBP, the British pound. Remember, the dollar index is a basket of goods and measures currencies to the dollar. So right now, you're seeing the British pound recover back above its EMA ribbon. Okay, now this is inversely correlated to the Dixie. If we have the British pound doing well, and the reason it's doing well today is they've just voted in Rishi Sunak as the new prime minister, that is why the dollar index is benefiting from that, okay? But this has to be sustainable. We don't want this to get rejected from here, because that can mean the dollar index will bounce back into an impulsive move to the upside. Another key catalyst that's moving the markets today, because the markets were a bit choppy this morning, and then suddenly we saw the market moving. And what led the market to move? Because if you look here, we can see the markets are doing really well. Okay, you got the Nasdaq 1.7%, 1.2% on the Dow. 1.2% on the S&P, and the Dow up 0.8. What caused that? Well, I need to show you that as well. It is the US 10-year. We have to look at the US 10-year government bond, and yield started to fall. But again, it's still in a strong upward trend. So this doesn't mean that we've suddenly lost momentum here. This could just be coming down to its EMA ribbon. And that is why we need to remain patient here on what is going on. I'm going to come back into the Bitcoin chart because I've got a few more interesting patterns to show you. But I did promise you, like the thumbnail and the title said, that we're going to talk about Andre Cronje. We need to discuss this. Because Andre Cronje makes this post, and before I get into the whole post, it's a really long one, guys, so that's why I'm just going to summarize it all for you to save you the time of going through this. But one thing's for sure, at the bottom it says this, by Megan Diamond, okay, which is some sort of South African law firm. Now, we know Andre Cronje is South African, he's in South Africa. It looks like one of his relatives work there, so maybe this is a law firm he's instructed to be his ghostwriter, and he puts it there as a caveat or some sort of disclaimer, but it's definitely his Medium post. So whatever he says here, he clearly endorses it to an extent. This is what he believes. So let's break down down to see what is his mindset. And obviously it's really, really long, but I just want to get into the nitty-gritty main headlines of this. Now, the first thing he covers off are the main events that's happened in this crypto winter, right? He speaks about Terra Luna, how UST collapsed, and how that ultimately led to 3 Arrows Capital collapsing, Celsius and Voyager, and the contagion effect around that. We've covered that off to death on this channel. If you've not watched all the videos and you're a bit confused or you're new to crypto, I think it'd be a worthwhile use of your time to go back and watch some of those key videos on the channel. Just type in 3 Arrows Capital or Celsius or Do Kwon and you'll find those videos and watch them so you've got context of what goes on, because these are historical moments in the journey of crypto. So it's important you know what's going on. And what he then said was he ran through all the details of every single event, and you can read it, but the ultimate conclusions he's coming to was he thinks we need regulation, right? And he's always been pro-regulation. You guys know quite transparently, I'm pretty pro-regulation as well. I wouldn't say as much as Andre Cronje, but I would say I'm pro-regulation to an extent. Now, I don't want overreaching, very, very clear. All I want is enough structure in place that companies, institutions, investors have some safeguards in place such that we can operate. Remember, until regulation of traffic lights and road rules came into place, cars were not ubiquitous. And it'll be the same for crypto. And until we have some safeguards, some measures in place, you're always going to alienate those really, really scared investors who want those structures in place, who want to be make sure they cross their T's and dot their I's. You're not going to get that. You're not going to get the mass adoption. So I vouch for that. Now he come in and said, look, when you see what happened, and this is interesting to see coming from him, because you can read it about, let's see if I can find it. So he starts talking about how there's no difference between what went wrong here and what went wrong in traditional finance in 2008 in terms of the global financial crisis. And this was really interesting. We've spoken about that at length for this channel. We know that there's rehypothecation. We know there's over leverage going on. All the standard practices, I've said this time and time again, are going on in crypto. And that's really frustrating for me, and clearly frustrating for somebody like Andre Cronje to see those same issues playing out. Now, what he then goes on to propose is, well, if you're getting the same issues as traditional finance, we should solve them with the same thinking as traditional finance. And that's where I slightly disagree with him. So he makes the point that, look, if this was in traditional finance, you would have minimum reserves for each bank. So he's calling Celsius and Voyager banks, right? Because they're in essence acting like banks, which I agree with to an extent. So if they're going to be taking deposits and they're going to be loaning things out, they're acting like banks. So he's saying you need minimum deposits, maybe held with any exchange, mandate that they need a license. He says they should apply standards of transparency and include crypto in the meaning of what constitutes financial product. So he's going down the route saying they should do the exact same as traditional finance. Now, I think that's a lazy approach. I think it's right in the fact that you need some sort of regulation to avoid these kind of things from happening, but I don't think you want to answer it with previous practices from the status quo, which we want to be better than. I think that's the wrong way to go about it, and I also think it's a dangerous way to go about it. Crypto and Web3 is supposed to be the antithesis to traditional finance. We're supposed to fix their mistakes. At the moment, we're making the exact same mistakes, right? So we can't use the things which didn't work to fix what we're trying to improve on. I hope that makes sense. He then goes on to say, look, one of the big issues he had was how Terra Luna collapsed with just a handful of wallets, right? He analyzes the wallets and he shows them and he says, look, these were the handful of wallets, many of which were unknown, and they caused the collapse. They controlled the majority of the supply, and just 7 or so wallets could cause so much destruction to the average consumers, to hedge funds, to capital, to other major companies like Celsius. How could that happen with no accountability, no transparency? And he's completely right about that, right? That this is part of the problem of what's going on in crypto. We've strived so much for decentralization and permissionless that it then is opening us up to such vulnerabilities where our whole crypto ecosystem was flushed out by a couple of people making a decision on how to move their funds around, right? And that's an issue. Now, what happens with traditional finance, which is interesting, is you have these safeguards in place, right, to make sure banks are well capitalized, to do X, Y, Z, and stress tested. But the reality is, it's like a domino effect. You need one of the dominoes to be glued in to stop the rallying effect. But what we saw in crypto was that wasn't the case. Right? So you started off with the weakness in, let's say, Terra Luna, anchor protocol. That then collapsed the Terra Luna peg. That caused issues for Celsius, caused issues for 3 Arrows Capital, caused issues for Voyager, and who knows who else had issues, right? A bunch of exchanges were quoted as being in trouble as well, because none of them were following the right practice. They were all doing the same thing, not managing risk well, and doing the same mistakes, over-levered, misallocated, all the same issues we've seen previously, okay? He covers off the Celsius collapse in detail. He said, look, they were over-leveraged, they were poor reserves, poor decision-making, and, this is all stuff we've covered at the channel and we know about. And then he kind of summarized by saying, look, regulation needs to cover three things. He says negative externalities, which I agree. So that basically means, look, if one person is a bad actor and causes mistakes, how do we stop that from affecting the other dominoes in the pack, right? If you have one bad apple, how do we make sure it doesn't make the rest of the apples rot? And I agree with that. That's not fair. If you have companies which are doing good, exchanges which are following all the rules, and then one doesn't, the good one shouldn't be affected by the bad one. That's important. But I don't think that's what we saw here. I think we've seen that all the ones so far which have collapsed and made the headlines, they all had shady practices, and that's the issue here. I think there's a difference here. It's not like, Binance or FTX or these guys struggled. I mean, they've been following the right business processes, but we've seen that the ones that have made huge risk management mistakes, whether on purpose or otherwise. And then he proposes finally a way of fixing it. He says, look, he wants to see some sort of deposit insurance, similar to how central banks will insure your deposits in a normal bank. He thinks there should be prudential supervision, which basically means that the government oversees these platforms to make sure they're adhering to best practices. Again, don't know how some of you are going to react to that. And these are the kind of ways he thinks things should improve. So, interesting article from here. No signs that he's trying to return, but I think what's clear is that he's still focused on the market. So no doubt somebody like this, I've said this time and time before, he's not leaving crypto. We know from a Fantom perspective, he continues to work with Michael Kong. Go watch my interview with Michael Kong where it's pretty clear, he doesn't say it in so much words, but it's pretty clear that he's still working strategically with Fantom and the ecosystem, and a brain like him is definitely working on his next few projects. What he knows better than other people is these are the times to be building, and no doubt he'll be building somewhere, trying to look at the mistakes that things like Terra, Luna, UST, etc. have made, and trying to come up with a new project. He's a builder, and whether you like him or not, whether you think he's rocked certain projects, I don't think he's gone. I think he's going back to crypto. But one thing for sure, which I have to make sure we summarize on, is that we do not hold people like this on a pedestal. If he does return, I do not want people in the ecosystem putting him or anybody else on a pedestal. The networks we're building, the systems we're getting behind, whether it's Fantom, whether it's Cardano, whether it's Solana, should be greater than the individuals behind it. We are not just Andre Cronje. We are not just Charles Hodgkinson. We are not just Vitalik. We are not just Satoshi Nakamoto. And that is why he never revealed his identity. And it's important we rally behind that message and make sure we don't fall into the trap of putting these people who like we've seen, many of them have very bad incentives, right? If you look at the likes of Alex Mahinsky, if you look at 3 Hours Capital, if you look at Do Kwon, I mean, to say there were shady practices, I mean, that's the minimum we can say at this point, right? So we've got to be careful of not putting these people, these mavericks, as the center of any of these projects. Okay, let's wrap things up, guys, because I've been rambling on for quite a while. And what I want to show you was the pattern we're in. And this is the one we need to focus on, right? We've been watching this triangle for a very, very long time. And I said it's any moment now that we're going to break out. So what are our price targets? you've now got your confirmation. The one thing I'm worried about, I mean, I probably will just jump into this long, but the one thing I'm worried about is the volume. There's a lack of volume here. And now you can track, now the different price points are: 1, this pivot point here; 2, you want to get to that point; and 3, there. So if I read these price targets off to you guys here, the first one I'd be looking at is 20,500, very easy. Then I'd be working our way up to 22,384. Once we've done that, then we want to get to here. And I'm going to show you why this is important, because this 24,400 level is really important. So very quickly, let's just remove some of these so I can illustrate my point very clearly for you guys. So what I want to do is let's switch this up. Let's just show you 2 things now. So remember, the first thing I shared was this small W pattern. That's where we're getting to now. We're getting to that neckline. And if we can, that move is going to take us there. Then we've hit that first price target. But then what's interesting is if we can work our way up to the next one here, which is that neckline, then what you formed is a really big W pattern. And that could be the move that takes us up to 29 and 30. So this could be a really interesting relief rally, and definitely one which I want to be trading. If you guys want to trade this, you can do so on BYBIT or BitGet. Links in the description. This could be a really nice relief rally, but again, it's going to depend on that dollar index, and we've got to make sure we've got tight stop losses. We are trading against the trend. I cannot emphasize this enough. We are trading a long position against the trend. If you're not experienced, only do so with lunch money. If you're not experienced at all and you're nervous around trading, please only do what you're willing and able to do. If you want to just learn the basics, go do so. Maybe trade on a dummy account with paper trading, or just trade like on a piece of paper. I used to do that. I used to just write on a post-it note before paper trading existed back in the traditional finance times. I just write, I'm in the position of this, and then I see how my emotions react, and then I say I exit the position, what's my profit loss. I used to do it manually on a post-it note. So always a good way to learn. Go learn my TA, ijaz.uk/TA. If you want to become a member where I can help you guys and we can do portfolio critiques, look at technical analysis, ijaz.uk/member. Guys, don't forget to smash the like button. Don't forget to subscribe. As always, check out the links in the description, and I'll see you in the next one.